Welcome to Business Innovators Radio, featuring industry influencers and trendsetters sharing proven strategies to help you build a better life right now.
Hello, everybody. Today I'm interviewing Bill Parrott, President and CEO of Parrott Wealth Management in Austin, Texas. Welcome, Bill. Thank you for being here today.
Well, thank you. Thank you for having me. I appreciate it.
Great. Bill, before we jump in to the thick of the subject, could you tell us a little bit about yourself?
Absolutely. I am currently in Austin, Texas. I'm a native of California, where I was born and raised. Spent my youth there just outside of Los Angeles. Currently married to my wife, Tanya. We've been married for 23 years and have a daughter whose name is Hannah. She'll be going to Baylor University in the fall as a freshman, and do a lot of running, fly fishing, very active in my church, and enjoy travel whenever given the opportunity.
Wow, fantastic. Well-rounded man.
Yeah, I think so. It's got a lot of interest and enjoy them all.
And speaking of interest, what got you interested in the financial planning industry in the first place?
Yes, I started in the industry in the late 80s, hoping to be the next great stock picker like a Peter Lynch or a Warren Buffett. I didn't have really any interest outside of the stock market, and I got involved in financial planning after a client asked me if they were on the right path to retirement. And it was a great experience, and after my third or fourth plan, I felt like this was a better way to service clients. And one plan in particular really sealed the deal for me. It was a couple in California. We had completed their plan, and a few days after I delivered it, the client gave me a call and asked if she could afford to buy a new car, and I told her she could buy two. I knew this because we had just completed the plan. I knew where the assets were. I knew where their finances were going to take them. And that was over 25 years ago. And she's still a client today. And I found that the financial planning process is really the best way to strengthen a client's financial foundation and make their plan succeed. I've also noticed that clients that go through the planning process seem to be more content and at peace with their finances than people who do not go through the planning process.
Mm-hmm. So are you a certified financial planner?
I am. I am a CFP certified financial planner. I've been certified since 2003. It's a tremendous resource. Very involved in the program through the continuing education. The CFP organization also does an excellent job of educating the public on working with a financial planner, and specifically one who's a certified financial planner. They also do a great job on the legal front with lobbying efforts and keeping us informed on the latest trends in the industry. So it's a designation that I'm proud to carry, and I've had that again since 2003.
Great. Do you have any specific areas of focus? Because there's a lot that is involved in financial planning, right?
Yeah, there are. There's a lot of roads you could travel down, and I primarily focus on retirement planning. My goal is to really get people to where they want to go financially. I want to help them afford a retirement lifestyle they want. And for those individuals that are approaching retirement, I want to make sure they have the right assets, the correct allocation that will help them meet their needs, whatever their needs are. I also spend a lot of time on the emotional side of retirement. It's not easy to jump from work to retirement without some soul searching. The emotional side is harder to pin down than the financial side. With the financial side, the numbers are easy. Either you have enough money to retire or you don't, but not so on the emotional side. And for individuals already retired, my only goal is to keep them there. I don't want them to have to go back to work. And this is done through, again, the financial plan, quarterly reviews, client communication, And those individuals that are in retirement, it's a general balance between having investments designed for safety and those for growth. But you're right, there are a lot of avenues to financial planning, and my main focus is retirement planning.
Mm-hmm. Well, you say there's a lot of avenues, but there's also a lot of advisors, right? I mean, and what separates you from others?
Yes, that's a great question. And I've been told I have a servant's heart, and client service is very important to me. It's at the root of how I conduct my business. I view my career in the industry, the financial services industry, as my mission field. I love what I do. I'm very blessed to have found my calling. And that, along with my experience over 25 years in the industry, my passion for the industry, and compassion for the client, I think those things help me separate myself from others in the industry. In a way, I view myself as a financial missionary, helping people to get to where they need to go financially. And that service-oriented role that I take, again, is at the center of my business. And I think that really separates me from others.
Nice. One thing I noticed when I read your bio is that you mentioned in there that you're a fee-only planner. What is that exactly?
Yes, so a fee-only planner is one who generates their fee from the assets they manage or the services they provide to the client. So I am a fee-only advisor. I'm paid for my advice. I'm paid for investment management and financial planning. I also act as a fiduciary, putting my interests of the client first and disclose any conflicts. Now, this is compared to a broker who might earn their pay through trading or commissions or buying expensive mutual funds or insurance products. They are generated by activity. Their fees come from turnover, and I'm not employed by a bank, a brokerage firm, or an insurance company, so I don't have any incentive to sell a certain product or trade the account to generate commission. So a fee-only advisor is one that only generates their fee, their pay from the clients they work with, the clients they serve, and the fees they get from servicing that client. And my only motivation is to grow the assets and protect the assets and not generate commissions through trading or expensive products.
And how would that translate in terms of benefits for the customers?
Well, that's a great question as well. The nice thing about a fee-only advisor, there's no incentive to offer any expensive products or service, so we can keep the trading costs low, keep the investment costs low. There's not any incentive for me to trade the account. And it's been found that if you overtrade the account, if you generate a lot of fees, your returns will be less than somebody who takes more of a buy-and-hold approach and hold on for the longer term, as opposed to trying to generate a commission because you have to meet a quota by the end of the month. So it's more aligned with the client. It's on the same side of the table as the client, and getting that client to get to where they want to go financially. Again, whether I trade or not, it doesn't matter. The goal is only to grow the client's asset. I'm not incentivized to do any trading or generate any fees that might harm the client financially in the long run.
Makes perfect sense. Staying on the client's side, what are some of the most common questions your clients ask you?
So the two questions I'm asked most often when I sit down with somebody is, how much money will I need to retire, and how long will that money last? Those are really at the center of most client questions. And I recently read where 59% of individuals over the age of 18 are concerned about their retirement. They're concerned about not having enough money in retirement. And that's a scary percentage. And with the financial plan, that will eliminate that concern and help them answer those two questions of how much money they will need and when can they retire. When I do my year-end reviews in January with the clients, I get a few more questions. Things like, how do we do? Did we make money? Did we beat the market? Because at the end of the day, people still want to make money regardless if they have a financial plan or not. They want to make sure they're moving forward financially. Those are some of the questions that I'm usually asked over the course of a year and when I meet with individual clients.
Interesting. One thing that I know is that a lot of people try to do it themselves. I mean, there's a lot of advertisements out there to say, do it yourself. It's not that difficult. Just use this software and you're going to be rich, or whatever it is.
Exactly.
So what are some things they might try?
You're right. It's never been easier to be a do-it-yourself investor. The technology and the trading tools today that are available online are phenomenal. They're very powerful. You can go online and answer a few questions and have a portfolio built for you, or you could trade your way to however you see fit to manage your own account. And that's a blessing and a curse. I think if people are prepared to invest themselves, it could work in their favor. For people that are trying it for the first time or not used to technology for trading, it could be a big curse. And I found that people that trade online, what I've seen in the past is they're usually very quick on the trigger finger, very quick to sell, or they buy at the wrong time. And that can be pretty damaging. And they're always looking for the next Apple or the next Microsoft, and which is fine, I guess, if they find it. But a lot of times they're buying a stock or chasing returns because of something they saw on TV, heard on the radio, read online, and they buy that investment without much consideration of what it's going to do to their portfolio. And that could be very damaging in the end if they buy the wrong thing at the wrong time. And these investors spend more time focusing on their trading than they do planning. It's kind of like driving a car without a GPS. And I think if those individuals spent more time on the planning component, they would be better traders than they are today. But with those tools available to them, it's very easy to get caught up in the day-to-day movement of the market, which could be bad or good depending on how they're trading. But those tools are very powerful, and if they're in the wrong hands, could do some harm.
And correct me if I'm wrong, I'm no expert, but one thing that comes to mind is that when the individuals try to do it themselves with limited knowledge, they fall into the gambling type of mindset, and emotions get in the way. And my understanding of investment is that if you let emotion dictate what you're going to do, you're in deep trouble, right?
Absolutely. There's no gatekeeper between the client's mouse and the market. So they could trade a stock in seconds, and a lot of times it's done on emotional impulse than it is after much thought. And if you go back to January of this year, I forget the exact number, but it's something like $50 or $60 billion came out of the stock market at the wrong time when the market was going down. And since that time, since the end of January, the market's up 13, 14, 15% from the lows. And again, there's no emotional, or the emotional side takes over, and there's no gatekeeper in there to say, wait, let's talk about this. What are you doing? Why are you doing it? Let's make sure we're making this decision for the right reason, not based on an emotional decision. And you're right, that emotional side is really what gets people into trouble in the end, because they're not acting on fundamentals of a company or research on a mutual fund. They're just trading because of what they see or what they hear, and it has, again, some results that are not favorable to the client.
Well, anything else you'd like to add in terms of why working with a professional like yourself would improve their chances of succeeding?
Sure. And this goes back to an athletic analogy where elite athletes have coaches, and those coaches make that athlete better. And the coach is in a better position to watch what that athlete's doing, listen to what that athlete's saying, to help that athlete perform better, whether it's in track or basketball, football, baseball, soccer, whatever it is. That coach is in a position to say to that athlete, let's try this, let's try that, let's work on this. And when that athlete takes that information, they're going to be the better for it. And I view my relationships with my clients as a partnership, working together as a team to help them reach their goals. I look at it more as a financial partner or a financial coach as opposed to a financial advisor. And of course, in any relationship, as you know, there's give and take. And that usually comes out during the quarterly reviews I have with my clients. And going back to the previous question, Wall Street is a frightening place to try to go it alone. And I feel with a professional, investor, planner, those individuals that work with one can improve their odds, whether it be through planning or portfolio construction or investment selection. Using those tools with a professional can enhance the experience for the client and hopefully give them better returns over time and not rely so much on emotional impulse, but have a plan, working with the coach, getting to where they need to go financially. I think that's a win for everybody.
Yeah. Well, before we wrap it up, if you were to offer one piece of advice to our listeners who are either using an advisor right now or not, or in between, if there was anything that you'd recommend in general, what would it be?
Sure. There's a few things. One, try to keep your trading costs low. That's something that the investor can control. If they keep their trading costs low, their investments low, that enhances their returns over time. I would encourage them not to trade too actively. They don't need to trade every day. A lot of times the best strategy is to do nothing. And then last, I would encourage them, when the market's doing very well and they're making a lot of money, is to not get overly excited. And on the flip side, when the market's not doing well and their investments are performing poorly, not to get overly depressed. The stock market wins in the end. So I would encourage individuals to spend more time focusing on their investment goals and dreams. And I think if they do these things, everything else will take care of itself and they'll be the better for it.
Thank you so much for being here today, Bill. Sharing these ideas with us. Now what I'd like to ask you is, how can our listeners learn more and get in touch with you?
Yeah, well, thank you. Thank you for your time and the opportunity. As I mentioned, or as you mentioned, I am in Austin, Texas. My direct phone number is 512-813-7642. My company website is parrottwealth.com, and that's PARROTT wealth.com. So it's Parrott, like the bird, with two T's.
Awesome. Well, Bill, once again, a huge thank you for taking the time to share this knowledge with our listeners. It was a real pleasure.
Well, Eric, thank you very much. I appreciate your time and the opportunity, and hope we could do it again.
Awesome. Have a good one.
All right. Thank you very much.
Thanks for listening to Business Innovators Radio. To hear all episodes featuring leading industry influencers and trendsetters, visit us online at businessinnovatorsradio.com today.